Okay, what is up, Trading View? Hopefully, you had a successful trading day. As you see right now on the chart, before we get into the actual market analysis, I'm going to replay this trade that I took today, how I managed it, and maybe what I would have done differently. So, if you looked at the idea that I shared this morning, it was around 6 a.m. I was going to post earlier in the night and I totally forgot about it. Not forgot, but I passed out. I was dead tired. I took my godson to the splash pad, ate some dinner with some friends and family, stayed up, etc. Took him back to the airport today and finally have my office area back and we're dropping videos again. So, in my computer, you can't see, but maybe if I take this, I don't want to take the camera off. I'll do a video one day with my computer, but my computer is built into the desk, so I can't just take my computer anywhere. It has my monitors set up. Anyways, that's all beside the point. Let's actually dive into this trade that I'm talking about. So I saw this trade right here. We had this beautiful support and resistance right here. I'm drawing our support and resistance off of, let me grab a pen here, this area, obviously this area, this, this, this. And something I'm keeping in mind is not just how price touches this area, but how it reacts to this area, right? If after it rejects off the area, it's a strong impulse back through in order to get some type of momentum to break through that area of resistance or support. Okay, so let's take all the drawings off. Okay, so all the drawings are off. Let's go back over here. So we just came back down here and I had this as my 1 hour target. This is the bottom of this channel that I had drawn right here. The reason I have this channel is more like an ascending channel, but it has almost like a wedge to it, right? So it's like an ascending wedge, which for me usually means continuation depending on the area it's getting to. Now, my nearest liquidity zone was up here on the 1 hour, this spot. Okay, price never came and took out those highs. It missed it right there on a smaller, like if you looked on the 1 minute, there'd be a little bit of structure, but it missed it. So it's something I'm keeping in the back of my mind. And you, again, if you look at the post that I dropped yesterday, you see I had that area marked as my target for my liquidity zone, depending on how price reacted in this area of support or resistance. Here's what I noted though, was this wick right here was my indication that we were probably going to go higher. And what we did is we came back and we broke above. I'll explain that arch right there, what I just did. But we broke above kind of correctively, right? And when we break above correctively like that, which means price is slowing down, it's not very impulsive. So it's forming correctively above this wick and this strong support and resistance. And once price just barely comes back into this area, and I mean barely, let me delete this. This was where I had my markup for y'all, was in this spot last night. Yeah, right here. This is like 9 o'clock, 10 o'clock at night. I had price coming back into this area where we get some type of rejection and then we look for a push higher. So price did push higher, it came back through. It correctively moved back into this structure. Now think about this. If I correctively moved above this support and resistance, we should have had a strong impulse back down, came back up, hit the bottom of our support and resistance, gotten some type of continuation pattern, and then looked for our target down here on the bottom. However, we didn't get that. Instead, we got another corrective structure coming down here, giving us a bit of this descending channel, okay, which now gives us this arch. So we went from corrective to corrective, but how did we go from corrective to corrective? We formed from corrective structure back on top of the support and resistance that we had drawn. And as soon as we got that, it never broke below, and instead it pushed higher again, and then it pushed higher again. Now, here's what I'm noticing. As soon as we're getting a test of, again, this wick here is my indication that we're going to go higher. But as soon as we test this thing again and we get some downside, in my mind now, this support and resistance has now become a very valid area. And I'm not looking for the market to go short now. I'm looking for the market to go long because it came back up and did this right here back into this area. Now, 3 times, 1, 2, 3 times, we've broken back above and we failed to go back down below our support and resistance. So as soon as we've done that, there is a beautiful channel. This is now at, let's see, 9 a.m., which was 7 a.m. my time, and at 6 a.m., which was here, is when I was looking for a position. Now I got on the road. I had this markup in my mind, and since I knew I was looking for a long position, I just went ahead and I entered my position. And right here, okay, so it's 7:40 a.m. Let's go ahead and press play. So price comes up. As soon as it does this, I get this massive impulse above. And as soon as I'm seeing this massive impulse, I'm reducing my risk back to the inside of structure. I didn't take all my risk off the table. Okay. I took my risk and I placed it back in here. So now I'm only risking 19 pips on this trade if it comes back down, because I'm looking for a stronger move back above this area here for our pattern. See this nice wedge that formed? This is a sign that the market wants to continue. Right here is when you have this type of build up, this pattern. So I'm seeing the market wants to continue. We get a great entry, and let's go ahead and press play again. Market comes down, doesn't tag me out. It touches back on top of our support and resistance. And at this point, I was driving, so I didn't see it, or else we could have got another stack in position there. Let's delete this. And let's press play again. Market now continues, pushes higher, and as soon as I see it up here, now at this point you got to realize we're running 90 points in profit. So what do you do? I accidentally took that off. What do I do in this situation? Immediately all my risk is off the table, and instead I have my stop loss set into profit. That way, regardless of what happens with this trade, at the end of the day, I don't want to be trading unrealized profits. Okay. These are profits that are not mine yet. I have this strong of an impulse to my target up here. It's 140 pips away. I'm running 90 pips. I'm thinking to myself, okay, I'm taking my risk off the table. This is a risk-free trade. I'm not risking anything. If it plays out, it plays out. If it doesn't, it doesn't. Either way, it's a win. Because for me, it's more important for my strategy to play out. And, as I'm saying that, that can be twofold. Okay. With me recently, I've been taking profits off the table too soon. So I'm trying to break myself of this habit of where I've been taking my profits just too soon instead of letting my trade play out like I know it will. So instead, I know my trade's going to play out. I know my position and my direction that I've called is right. I know my target's going to get hit. So I'm just taking my risk off the table and I'm allowing the trade to play out. Okay, so we fast forward. Market does this right here. Now, look, I did not expect a... Let me grab a measuring tool. Usually if you get a pullback, like I was expecting maybe 80 pip pullback, but not a 150 point pullback. right? You can't call that. There's no way I would have known the market was going to pull back 150 points. Now, at this time, I realized, okay, I got taken out of my trade. I was still in profit for the end of the day. Was I up my total percentage in profit? No, I wasn't. That's fine. But, either way, I let my trade play out. And the market instead, I'm now back on the road. Family's dropped off at the airport. And the trade continues and takes us out in profit. And look at this. Look at that. Go look at the markup yesterday to the pip, right? To the pip, we called this one. And even if I would have left my stop, let me grab this and adjust it. Even if I would have left my stop loss, I mean, I wouldn't have. This is 40 points down here. And at 40 points, that's just crazy. And I want to take my risk off the table if I'm moving 80 pips, almost 90 points into profit off the start of a trade. It'd be crazy to hold my same stop loss to come back and get taken out. So I played this trade exactly how I should have. The market immediately goes back up, hits take profit, like I said, to the pip. You couldn't have called it any better right there. So it was a beautiful trade. I'm not upset about it. I let my strategy play out. I knew why I was entering the trade. I knew what I wanted to get out of the trade. It wasn't essentially just profits, because again, my thing was I've been taking my profits too early, and my win rate was at like a 76% or something like that, which on a good trader, I'm saying that like relatively, in relativity, I guess is the term. Your win rate should really be around like 45 to 65%, 60%. And anything higher now for my trading method, if I'm ranging into the 70 to 80%, that means I'm taking my profits too early. I'm not letting for the full positions to play out. And at the end of the day, like, I want my full positions to play out because I'm going to get more return off of my investment that I'm actually putting into the market itself in total. If I'm risking, let's say, for me, I use like a three micro, or I forget. I literally forget. Hold on. Let me pull up my micro. I use a 3 micro. So I'm only risking essentially in this scenario like $80, $90 on this trade, but I was looking for like a $300 plus dollar move. So $70 risk, a $300 profit. So it's these like nonsensical for me not to let this play out, because I'm looking for usually 2 to 3 moves on a good week. And on a good week, if I get those 2 to 3 moves, you can obviously see you're looking at like close to $1,000 on the week just from trading a micro contract, which is crazy because my total risk, I may be looking at $1,000 profit, but my total risk on the table was only $200. Insane. And it's not about having these crazy position sizes, these crazy lot sizes where you think that you're getting a bigger bang for your buck. You're like, yeah, but you don't have to trade these giant moves. And it's like, I'm not trading a giant move. I'm just trading. If you don't have a strategy or a plan in place, you're just throwing a massive lot size on a trade, and then you're grabbing 20 ticks, 50 ticks, and then you're taking it off the table. Like, okay, well, if you were only looking for a 50 tick take profit, then what were you willing to risk in that position? And most people are like 20 or 30 ticks. So you're trading a 1-to-1, which means if you win one trade, then if you lose one trade, more than likely you're behind 2 trades because you don't really close where you want to close because you didn't have a plan. You aren't trading proper risk management. So this is a great scenario where the trade hit our target at the end of the day, but it didn't play out in my favor because I was managing it how I wanted to manage it, which was after I saw this break above, I'm reducing my risk on the table. And after I got my second push up, I'm taking my risk off the table completely. And I'm waiting for it to hit my target, which it does. It just dropped 150 points before it went and hit my target, which is crazy. And it barely still took me out. If I would have kept my original, stop loss, sure, like I would have stayed in the position. But in scenarios like this, you aren't going to always get 150 pip pullback. Usually you're going to get a 50 pip pullback and then price continues. But that wasn't the case for gold today. And at the end of the day, it was Tuesday, or it is Tuesday. So not too much we can do about it. However, let's go ahead and look at where gold is at now. Let's move this stuff to the side. Let's take this off the table here. Delete, and delete. So our take profit 1 just got hit. So that was our 1 hour target right here. Just got hit. And now we want to see how price is going to react to this area. If we are going to get a further move here or rejection down. Even if we don't break this, we could still look for potential highs up. If we do break this here, not saying that you can't even trade into this area, right? You could maybe look for some downside moves, short positions, like in this area down to the bottom here. But I would be more looking to see how price reacts on top of this area here, right? Because we've seen how strong that support and resistance is. Look at that. I'd be looking to see how price reacts off of this area to then see if I want to take the position to now would be our 4 hour liquidity zone. You'd be looking for trades here and on top of the zone and maybe right here at the top. You could find maybe 3 entries just off of that one push up. Now, if price does come down in this area and we get a break of structure, I'm looking for a retest of structure, and then we're looking for some downside. Okay, something like this. And you'd be looking for a trade somewhere in these areas right here. Looking for shorts down into your 1 hour target and your 15-minute target as displayed on my last post, which you can see on my TradingView page itself. Now let's drop down. That's our 1 hour time frame. Look at this wick we just had on the 30-minute. Okay, 30-minute wick. Beautiful. That's what we'd like to see. Which usually indicates prices went up there. It formed this like doji candle. We'd love to see a break above. Then maybe some type of pullback off of this to then go higher. Same thing is waiting for us to, if price does come down, we said we were waiting to see if it does trend downwards. We're looking for price to come down, reject, then give us some type of pattern for us to go higher. But if it doesn't do that, then we're still looking for price to break above and then give us a rejection to then go to our 4 hour liquidity zone. But if it doesn't do that, then we're looking for some downside. We want to see a break below this, a test of this, and then look for some movement to the downside there. And the market's looking beautiful this week. We're getting a lot of nice structure, beautiful liquidity zones, nice targets, very clear, transparent targets that you just can't miss. I mean, these are just beautiful, beautiful targets, seriously. And now for real, this 1 hour target, like it's relevant only because of the second touch that I missed down here, but there's a 15-minute that will get tagged as well if price does trend down that direction. So hopefully you enjoyed this markup. Like I said, I wanted to show you that trade I took, what I would have done, what I did Would I have done anything different? Nope. I trade exactly how I would because it's according to my plan. I will catch you in tomorrow's markup, and please enjoy the rest of the content down below. Peace. Oh, wait. Trading View. Trading View. I just realized I don't have a 20-minute timer on anymore because look at there. That's perfect. Anyways, that's still the majority of the thing. If you are watching to this point, that should be funny. Totally forgot I'm not on a 20-minute time constraint anymore. So I don't have to like I don't know, be like fumbling over our time limit. But yeah, this is exactly how I would trade this. Seriously, if we got the one rejection and two rejections off of this, but we got to see some type of movement down out of this area that we're in now. Let's drop down to the 5-minute. And even then, like, this is such a tight flag. Like, we would need, for us to be getting a rejection off of a liquidity zone and a rejection off of the trend line, 1, 2, 3 rejections off of the trend line, including this wick. Look at this. You got 3 major things going on. Liquidity zone, wick back above to touch liquidity zone. You got trend line that's being rejected. We should have had this impulse move away here, but we didn't. Instead, we've gotten this little move. So I'm curious to see what price does here. Not much going on. I feel when I see this type of thing, we have had a strong impulse up, a move down is giving us a flag, and then we could look for some move higher. Again, some type of flag. Or flag / break above, then rejection. So like this, then this, right there. So this is a very simplified version. It's not going to look just like this arrow. But yeah, there's gold. Hopefully you've enjoyed all these videos. I appreciate everyone that's been following me on TradingView, and I hope to put out more markups, just like this one, where you can get some value out of it. I talk about entries I've taken, positions I've taken. That way you can start to get a feel for it as well. There's so many times on this platform that you see these traders that are making these massive trades, right? And they just advertise a dollar sign. And at the end of the day, it's pips. If you want to really flex as a trader, like, show your pips. Show how many pips you're actually capturing in the market. Because if you're just coming in and you're getting 10 ticks, 10 pips off of a trade, and you're making $3,000, $5,000 off of 10 pips, you got something significantly backwards. And that's what a lot of, maybe you don't realize that maybe you're brand new into trading, you don't have much experience. There's these individuals out here that are over leveraging. They actually don't have a trading plan. They don't know what risk management is. They don't have a correct trading style. And they come on here and they honeypot you. They show you these massive trading profits, but besides the trading profits, then they try and throw you on some moving average or all these indicators and different stuff on your chart. They cloud up your chart. Let's get that off. Oh, wow, y'all. I didn't even realize we had already gotten... Look, I literally still have my bar replay on. Karma in a nutshell. So, yeah. You have these traders that come in and they try and put these systems together, and it's not a trading system. It can't be replicated. Their trading system only works in certain market conditions, in certain time frames. Like, if it can't be taken to any chart during any time where it can not just be profitable, but you can analyze a chart and at least participate in a trade, and you can't do that, then you don't have a system and it's not going to work. So that's just is what it is. Hopefully, again, go watch the rest of my videos, check out some of the posts I posted, and click the little arrow button, watch how the trades play out. I'm not 100% accurate, but at least 70 to 80% of the time we call the market in the correct direction. And that is good. And, I'm saying good enough, but a great opportunity for you to start to learn and participate inside of these markets as well. So I will catch you next Asia session. Look for a posted idea. I'm going to have this nice and clearly marked up of what I'm looking at on top of this video that I just dropped. And yeah, have a great trading day. Do something amazing. Peace.